Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's get started on our analysis. Okay, and give me a second, please. Just kind of getting. Everybody knows that on Tuesday, look at the dollar's taking a little bit of a nosedive at this moment. Interesting. Okay. See, the euro is rallying up towards highs right now. Swissy's getting hit. Pound's above 143. Okay. All right. Let's take a look at everything here. All right. So let's start with the euro dollar, obviously. All right. So the euro, what a real big pivot off of support. You know, there's something that I can, you know, I mean, we can know for sure and for certain is that the euro major support is at this 111. I mean that's it. Okay, you know, it's really I mean that this is you know really key. I am very much aware that there's, you know, if you think about next week, okay, there's really just, and this is I have to think this way because I'm going on vacation. I'm going to be out of town, and I'm going to be, you know, if I'm going to trade, I'm going to be trading remotely, and I'm not a big fan of doing analysis on like looking at charts on a phone. Like I have to know where my levels are. You know what. Um, Wait, hold on. Can you guys hear me? Yes, no? Yeah, everybody can? Okay. Here you go. Thank you. All right. Everybody says it can hear me fine. All right. So I'm going to put that up for people that can't hear me. There you go. Okay. Talking about the euro dollar. So talking about like next week. All right. Next week is obviously the referendum. And and this is a really easy analysis here. If the UK votes to leave the EU, the dollar is going to rip higher. I saw somebody posted some analysis, or you know, in our chat room, they posted some analysis of some dude who's like, I predict the euro going up to 117. It's like, okay, uh, in the like longer term, I'm like, well, as long as 111 holds, you know, and the UK doesn't leave the EU, then you're probably going to be right. But are you that sure that they're not going to leave? And you know, who who are you to really know that? You know what I mean? It cracks me up. I always tell people I have a hard time figuring out what's going to happen 15 minutes from now, let alone what's going to happen weeks from now. All right, I can pretty much tell you right at this point that if the if the UK leaves the EU, the euro is going to drop. We're probably going to 105. If the UK stays in the EU and they do not vote for a Brexit, the euro is probably going to 115. Pretty simple analysis, in my opinion. All right, but I don't have the predictive abilities of a palm reader or a psychic, especially one that uses astrology to forecast the future price movements of currencies. I don't have that ability. But I will tell you, if the UK votes to leave the EU, the euro is going to break through 111, and when it breaks through 111, I'm going to short the crap out of it because I do agree, I do believe that the UK leaving the EU is not good for the EU. It may not be good for the UK and it may not be good for the pound, but it's definitely not going to be good for the euro because that will be the first step in the disintegration of any type of glue that is holding together the EU at this point. Okay? So, um, anyway, so if um, for right now, all I know is if we break through 111, that's it. The euro's toast. Okay. Until then, yeah, you trade off of these supports. If you can get them. Now, for today, where do I think the euro can go? Well, if you look at some of these fibs here, okay, the 618 is 113. This basically to me seems doable. Okay, it would be doable to get up there. It seemed like we can get to 113.08 just enough to squeeze people and then reverse, right? That wouldn't that be like total just screw job right there? Like we get a spike up to 113.08 and then just enough to squeeze out people from their stops above there and then reverse. Total screw job, right? Well, in my opinion, I'd like to be a seller up here. I think if I was going to do anything today, if you were to lure me into trading the euro today, it'd be selling it up here, somewhere between 13.08 and 13.20. Like I could see myself doing that, like this. Okay. And also, if we get a dip down towards 111.50, that would be a nice place to be on the long side. Okay. So trading the euro right now, what's your edge? What's your edge? What do you see there that clearly gives you an edge? Because I don't see it. I don't see it. Okay. Um, I think trading at 111.50 or and I hate to do this to you, but 113.20. That's how you trade it, I think. Okay, because I don't know if there's anything really to do here. It's like do you get long? You got all this resistance up here. Do you get short? I don't know. Um, this could cause a squeeze. See if we can get above these highs right here. You might create a little bit of a squeeze, right? Okay. Uh, Nick says, well, if you shorted up here, what would your risk be? I don't think you have to risk a whole lot. If you think about like relative strength, like if we got a spike up to 113.20, let's just imagine that this happening. What'll happen here is you'll probably get a little rally in relative strength right up in the like overbought territory and then probably reverse. So I don't think you'd have to risk a whole lot. You might only have to risk 30 or 40 pips, right? Or 30 or 40 pips to make, 'cause here's the flip side. Here's the flip side to all that too. Okay, let's say the euro squeezes a little bit. Let's say it just continues to squeeze higher. What? How do you feel the market's going to get going into next week? Like you get closer to the referendum, I'm thinking that nerves are going to get a little bit more rattled people are going to be less likely to want to own the euro going into next week, and same with the cable too. You know what I'm saying? So, if we end up squeezing up here, you know, if we end up squeezing up here to 113, 113.20, I'd be more apt to hold the euro on the short side going into next week. You may have some, some squeezing happening on a Friday, but, going into next week, people are going to start to get nervous, I think. So, again, that's just, my 2 cents. All right, let's go over to the cable. All right. So the cable, I mean, this daily candle, big, big hammer here, and so this could give us a little bit of squeezing. The pound is all sorts of emotional right now. Okay, and I don't know personally if I'd want to be uh, shorting the cable right now as it's squeezing. But the flip side is I wouldn't mind being on the short side at a little bit higher prices. I don't think. Um, Anybody who's caught short right now is going, oh crap, did I just sell the low? That kind of like if you're short down here, you're probably thinking, oh man, I sold the bottom, you know. And now you're starting to, second guess your decision if you're short, thinking, okay, well, what if the we start to swing in the the remain camp starts to swing a little bit more positively going into the weekend, that type of thing. I think that the market will be a little skittish going into next week, but you have to look for like a strategic area to be on the short side of the cable if you're going to trade it. I think trading the pound is a little dangerous at this point, but what do I know? That that wick right there, that wick right there spells trouble to me for shorts. That wick right there spells like, we could squeeze more, because the pain trade right now, in my opinion, the pain trade is people that are short the pound. Anybody who's short the pound's the ones that are in pain at the moment. Um, 144.10, 50. Just trying to think of, again, strategic places to be on the short side of the cable, which isn't right here where we're at. You got to let it squeeze a little more. So we got a fib confluence of an 88% and a 786 that comes all the way up here at 146. It's a pretty, that would be a pretty damn big move. We're at 143 basically right now. 144.11 is a 618. We've got a lot of congestion through here. A lot of congestion through here. So I would say that maybe 144 is going to give us some good resistance today. For today. Support on dips. We should be pretty well supported down here, 142.15. Okay. Nothing, no, really, nothing that really stands out. I wouldn't mind being on the short side of the pound up there. I wouldn't, but I don't know if I'd stick around too long. Like to hold a position over the weekend doesn't make any sense. Luca made a good point. He goes, "We're sure to get some pulls over the weekend," and yeah, the assassination of the member of parliament yesterday. Oh, it's such a shame. Anyway, her assassination yesterday. I mean, probably is influencing people. Um, you know, and so you might see some of those polls sway a little bit. Anyway, Regardless, I wouldn't, even if I shorted the pound today, I couldn't stick around for more than an hour or two. It's, that would be, that's my game plan. Don't stick around in the cable, whatever you do. All right, here is the dollar Swiss. So the dollar Swiss, under a wee bit of pressure, we can't even get a decent rally here. Okay, so that shows you how important that is. Let's get rid of this. I can actually get rid of that too. Don't need that now. We don't need that. Overshooting just slightly. So 95.75, 96.75. Isn't that what the numbers we wrote down all week? Pretty much, right? 0.9575, 96. Now it's 85. Yeah, have fun trading that. Nasty range. Okay, continuing on. Dollar yen. Now, let's just let's just hope we get a rally to 105.50, because you know what it would sound like when we got to 105.50. Some of you guys haven't listened more here. I'm going to have to do a poll in a little bit. How many of you guys have been listening to this webinar less than 2 months? Less than 2 months. Luca? Oh, anybody else? Brian? Avi? Daryl's first day? Ben, you know me pretty well. Milo, just about 2 months. DiMaggio? Andres? Bruno, just under 2 months. Okay, so if the U.S. dollar Japanese yen gets up to 105.50, you got to listen, and listen carefully too, because I always listen for like the FX gods, and if you don't know what they sound like this. Oh, U.S. dollar Japanese yen rallied to 105.50, and it's a perfect short. Yeah, that's what they sound like. Those are the FX gods singing to you. So if you can get up to 105.50, the FX gods, they sing. And when they sing, you act. That's right. It's an old joke, guys. If anybody who's been listening in this webinar for the last 5 years or longer knows that, well, I got married in Greece, and so I got married in a Greek Orthodox church, and I'm actually Greek Orthodox, believe it or not. I had to become Greek Orthodox to get married in Greece with a Greek wedding. Not an Americanaki wedding. To do an actual Greek wedding, with a Greek priest and everything. I had to be baptized Greek Orthodox. So if you've ever been to like an Orthodox church, it doesn't have to be Greek, but if you've ever been in an Orthodoxy type of church, I mean, they just sing, and they sing. They sing, and they sound like that too. It's like, whoa, U.S. dollar, Japanese yen hit 105.50, and it's a good short. Oh, and so the FX gods, to me, they sound a lot like an Orthodox church choir. So yeah, that's when I hear them singing, I know it's time to take a trade. So when the U.S. dollar Japanese yen gets to 105.50, anyway, all right, support down here is going to be 103.50. I mean, other than being on the short side of other than being on the short side of the U.S. dollar, Japanese yen, I don't see any. Um, I don't see any like trade right at this moment. I like you couldn't get me to be on the long side of this thing right now. But any move up to 105.50, I would be a seller, right? The scary thing about the dollar yen is the dollar yen's not even rallying. Like, as the equity markets recovered yesterday and they're recovering right now, the dollar yen wants no part of it, which is very, very telling if you ask me. Okay. Um, so Brian said they also saying if the yen breaks 106.50, get the hell out of stocks. That's true. I mean, hey, the break below 105.50, in my opinion, is a very bearish event for currencies and for risk in general. Okay. Um, I still think the dollar yen's we're gonna probe 100. I think once we get below 100, you start running the risk of intervention efforts by the BOJ. Um, I think. But right now, and I'm not short any yen pairs, which kills me just to think about that. Uh, Damn, I'm really wasting a lot of time this morning. Okay, I'll be back in a few minutes. When I come back, we'll continue on with our analysis. We'll get a little. We're gonna move a little faster when I get back. Don't go anywhere. I'll be right back. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I was looking at the Euro Swiss. Which is interesting. The Euro Swiss I think the Euro Swiss is actually a very good indicator of of how nervous the market is. When you look at and by the way, futures are not down 105 points right now. S&P futures are down 2 points. Dow futures are probably flat. It's just adjusting the continuous contract, so we're not really down 100 points on the Dow futures. That they're just adjusting them. But if you look at the S&P futures are down too. But I look at like the Euro Swiss. The Euro Swiss weakness is really, I think, very indicative of the tone of the market today. The market is a little nervous, and I think this is a better barometer of what risk appetite looks like at the moment. Because obviously the Swiss franc is in demand when the markets are a little risk averse. But if you look at crude oil is rallying right now, and that's keeping some downside pressure on the Canadian. So here's the Canadian. We gotta do our analysis here anyway. So here's the CAD. The CAD had a hell of a. Here, let's actually. Let's pull everything out from the CAD here. The CAD had a hell of a squeeze yesterday, and what you will notice with the CAD is we could not sustain our breakout. So you can see that, false breakout on the daily, if you will, and we're coming right back down again. Now, I don't necessarily think that crude oil is recovering here, but it's going to recover. It's got too much more of a recovery left, in my opinion. But you have to be aware that the Canadian is pulling back a little bit. So I would be more apt to buy the dollar Canadian on a dip. Now, we do have Canadian CPI today, which will be out. Obviously, we'll be covering that here in a bit. And you can see where we're holding where we're at. So 38% retracement. Any dip to 128.75 probably will be a decent opportunity for longs. And this is one of those currencies I wouldn't mind actually being long for a couple of reasons. First of all, I think crude's going to roll back over, frankly, and the other side of that is if the market gets a little risk averse going into next week, the dollar Canadian should act better. So anyway, dips down to 128.75. Not a bad place to be long, I don't think. Okay, let's resist it. Whew. Sorry guys, it's Friday. Yawning. Um, I know a couple of you are probably going, is that a head and shoulder pattern? You know, which it could be. Yeah. So I think that this support's going to be pretty big. I'd use that as the neckline, not not this. I'd want extra confirmation here. Okay. Um, Upside resistance will probably be right here because if we clear this, I'll just show you how choppy the market is. 129.75, that would probably create a bit of a squeeze. Okay. Here's a kiwi. Okay, so the kiwi, nothing's happened here, but here, let's delete a few things. I need I need that fib. There we go. Okay. Frankly, and just to let you guys know, I had an order last night to sell the kiwi at 70 in Asian trade. New Zealand dollar 70.70 will be resistance tonight, and support is at 60.60. That's what I wrote last night on my FX wrap. Okay, for the Wise Trade customers, we went as high as 70.67 bid. So missed my bid. Now look, whoops, that's not what I want to do. Right now the risk reward favors a short as long as we stay below this 70.70, right? And I think the risk is a move back down towards 69.60. Now I've actually considered shorting the kiwi. I think if we get back in the 50s, I will short the kiwi. Sorry, I had to stretch. If we can get back up to the 50s, I would sell it. I'm going to write down 70.70 as resistance. I think that would be a gift if we got up there. 60.60 is support. It's right here. Okay. And we're in a range. Let's go over to the Aussie. Aussie's a mess. Big hot mess. So you can see the 618 down here. Whoops. That's 74. I'd give it all the way up to 74.15. Now, so you could write down support being all the way down here, but I think any move down to 73 is going to be pretty well supported. So, okay. Dollar index. Now, this was really good. I tweeted out this chart yesterday. Right there. Boy, that was a rejection, huh? big, big, big rejection. And I mean, we hit that resistance to a T and it came all the way back down. So we're basically at support here. 94.25. Resistance is 95 and a quarter. And I'll tell you, if we break above 95 and a quarter, it's going to be big time. You know, think about next week, especially if you get that referendum. And the UK decides it wants to leave the EU. If that's the case, we're going to break through that resistance. It's going to be a massive, massive breakout too. Okay. Let's go over to the peso. So the peso, I actually traded the peso on the short side yesterday. I traded on the short side. Did I trade on the long side too? I've been trading on both sides of this peso though. Maybe I traded on the long side on Wednesday. Traded on the long side on Wednesday, and then I shorted the U.S. dollar Mexican peso yesterday at like 1904, and I think I covered it at like 19 or 1897 or something like that. So anyway, I've been trading on both sides of the market here with the peso. I'm just going to write down 1872 again, and then 1903. So 1872. Some major support. 1903. And it's still bullish. While we're above 1872, it's still bullish. Okay. Let's go. U.S. dollar, Swedish krona. Frankly, I don't even know what to do with this bad boy. It's like you don't want to short it. You don't want to short it because it's still making these higher lows. But at the same time, I don't know if you really want to buy it yet. Buy it here because maybe that spike created a head and shoulder pattern, right? You know what I mean? Okay. 830 is support, 835 is resistance, and I think we just have to wait for a breakout. 830, 835. Range. Norwegian krona. Let me look at that. Spike right into resistance. We spiked right into the neckline. 847 is huge resistance. I think while it's below there, you can probably be on the short side, but that's going to be huge resistance. 833 is support. Okay. Your bias chart is finished. So it's done. You know what I'm going to do right now?